Hey everyone, welcome to another episode of the Adventures of a Real Estate Investor. I'm Susie.
And Michael, we're excited you joined us for this adventure.
So today's very fabulous guest is coming all the way, one from the airport, two in Columbus, Ohio, three is Tate Siemer. Thank you so much for joining us today.
Woohoo!
Yeah,
So good to be here. So
it-
good to be here. Thank you.
yeah, we're super excited to have you on for a variety of reasons, but we met Tate, just to let all the listeners know, again, a very common theme, Brian Briscoe's meetup.
Yep.
And if you haven't been to that meetup, I know I talk about it a lot, you should try to go. If you are a new investor, an older syndicator, whatever word you'd like to use, that is a great place. And if you are a passive listener listening, it's just a place, if you ever want to go, don't feel like you have to, but if you ever want to, you just can, I guess, network with even other syndicators in this space to see if you buy with any of them as well. And so there's a lot that comes out of the meetup. So I just encourage everyone to ask about it or try to go to it once, whatever picks your favorite flavor.
Absolutely. Yeah. So Tate, would you mind sharing with our adventurous family, a little bit more about your background and why you started investing in real estate?
You bet. Yeah. So again, it's so good to be with you guys. You're two of my favorite people, and full disclosure to listeners, we're actually working together on a project right now that we put together a few months ago, and it seems to be going pretty dang well, all things considered. And so it's been a joy getting to know you guys through that, working on that project, and even before that. But I've learned a lot from you guys through the process on the technical level, even, and on the systems and processes level. So I appreciate you, and it's awesome to be on your show. So yeah, I'm real quick thumbnail. I'm originally a suburban Cincinnati guy, but I moved to Utah when I was 26, and I've been there for 22 years. So if you do the math, that makes me 48.
No,
To point out the
no,
obvious.
no.
And I moved to Utah to be a skier, and I still am a skier, and an avid mountain biker as well. But I've been in real estate since 2006, when I got into a single family investing course and just kind of learned the real basics of how to add value to property and how to find the highest and best use for property, and got off to a really good start with that course, and started flipping a few houses, and then got my real estate license. And then the crash happened, and I wasn't really in the groove yet financially and couldn't really sustain that very well. So I went back to being a photographer, which was my kind of trade gig for a long time, professional wedding and ski photography. And then as things started to kind of rebound, my longtime business partner at the time, Carl York, said, "Hey, Tate, would you be interested in flipping in houses again? Is that something that might be interesting to you?" And I said, "No, no way." And then long story short, 2 months later, we're flipping a house, and he won and talked me into it. And we did that hard for a good 6 years or so. And here again, house flipping I'll just say, I'll give everybody my honest take on it. It's a daggone hard, risky paycheck that is not wealth building. It's hard work, and it's a paycheck.
Mm-hmm.
Yeah.
And you're putting yourself out on a limb. It's speculative. There's ways of mitigating that, of course, but it's something and it's very, very difficult to scale. And some people have figured that out, but overall, we never really cracked the code on single family, and we never were happy doing it because it was something that as hard as we were working, we weren't really gaining a whole lot of traction as a business and as a business model. So about 4.5 years ago, started to look at a number of other business models, including land entitlement deals, where we did a few of these. We would buy land and raw land, and then take the entitlement process, take it through the entitlement process, which involves city approvals and stuff like that, architects getting plans made, and then sell those projects to developers and builders without ever breaking ground. So we did that a few times, and then we did a couple of new build construction projects ourselves, where we acted as the developer and hired builders. And quite frankly, those went very badly. And we had kind of, out of all the things we tried, those were really the only projects, there were two of them that were real failures. And you know, and you can, you know, that word is has a lot of weight and stigma behind it, but on a metric level, on a financial level, they were failures, and there's nothing wrong with that. It's what happens. So, but we learned a very hard way that there's an awful lot of risk in construction as well, that you add when you break ground on a project. You're introducing a million moving parts, and if you don't have the right builder and developer pulling the strings and coordinating things, it can really get messy, and that's what happened. So then we had a 12-unit apartment building fall on our lap, and this was life-changing for us. And when I say fall on our lap, it was actually the same source that brought us the townhouse deals, the ones that were really bad deals.
Yeah.
This wholesaler, same guy, brought us this 12-unit townhouse deal that was a huge physical value add, heavy lift value add. And we basically did a head to toe remodel, from everything from new TPO membrane roofs to all new mechanicals, high efficiency mechanicals, by the way, high efficiency windows, LVT flooring. And these were like little 600 square foot, one bed apartments that were getting maybe $600 a month in rent when we got them. And we were able to basically double that rent, and did very well, obviously, in adding quite a bit of value to that project. And so I apologize for the background noise at the airport here. It's a little noisy, but so that project was such a revelation for us, because when we went to underwrite it, like we do every deal, all of a sudden we're like looking at this new thing called cash flow and rents and like income. And that was brand new to us. Like we had never considered that we could actually make money by owning property. It was always, we make money by adding value and then selling it and collecting the value. We never really got our heads around. I mean, as much as we could say, yeah, buy and hold, yeah, it sounds great, we just never were able to do it. And we never got ahead enough of the game to hold on to what we were working on. So, and in this first case, in the 12-unit, we actually were in a position where we had to sell it as well, but we did very well with it. And so you could say we took it full cycle, we repositioned it, and it took about a year, the whole thing. And that was between 2018 and 2019. And then we spent the next year and a half basically going after larger unit assets. So 150 units in places like San Antonio. We had a 44 unit under contract in Albuquerque that COVID unfortunately messed the financing up on, or the timing couldn't have been more like just right on the money with how COVID all set in March of 2020. But
Yeah.
we were way down the road on that deal and almost to the closing table. And I did a mentorship with Corey Peterson, the big kahuna out of Phoenix. And I spent a year with him and in his coaching mastermind, and learned as much of the business as I possibly could from him. He gave us a lot of confidence to go after these bigger deals, because he was willing to say, hey, if you find these deals, consider me part of your team. You can even put me on your credibility kit and use my portfolio and all that stuff, because I'm willing to partner with you. And that gave us, just like I said, a large amount of confidence that we could get deals done that we otherwise maybe couldn't have, right? So that was really the first kind of big push into the multifamily space. And going to there's a zillion other things that we did, like going to conferences and meeting people like you and other people that have since become partners at things like Michael Blanc's Dealmaker Live and other conferences. Adam Adams did a couple of great conferences that we went to, and meetup groups, and all the audiobooks and podcasts, all the things that you do to sharpen your saw, get the specialized knowledge that you need to learn all the things you need to learn. And there's a lot to this, and it's not as simple as a lot of people maybe try to make it out to be. And Michael, you've taught me that actually. As much as anybody, you find nuances and things that I just in deals that I sometimes haven't seen myself, and that's like that's how you learn and in this business. So yeah, fast forward to today. In the last year, literally in the last 12 months, we've I take that back. Last 18 months, let's say, we 18 months ago had no property except for the townhomes that we were selling.
Yeah. And
in the last 18 months, we've closed on 7 different apartment communities, multifamily communities that total 572 units and roughly $40 million or so in value at this point in time. And we are in the Columbus, Ohio market and in the Oklahoma City markets. And we intend to grow those markets to have 1,000 units in each market by the end of next year.
Nice.
So that's really what we're creating. It's as a company, our focus and our priorities are really on our residents and on our investors. Those are the 2 groups of people that we serve, and those are the priorities in our business. And we feel like as long as we keep a strong focus and intention on serving those groups absolute best we can, that things will, go very well and do what we need to do. So yeah, guys, that's the short version.
Yeah, thanks for sharing. There's a couple things, or one thing I want to kind of point out, and that was like, so you started investing right before 2008, right? And you're investing there. I'm sure there were some issues with that, like came across some things where you said you had to leave real estate investing, go back to photography. So that was a learning experience for you there. And then with the development was another learning experience, right? And then like this whole process, like, I feel like you kept saying along the way, like, okay, instead of panicking every time you came across an obstacle like that, you just pivoted. You just moved into something else, right? Pivot. Okay, I learned from that, pivot, and then keep moving forward, which I love. And look at you now, just keep moving forward. That's what's so great about you, Tate. And like a lot of successful real estate investors too. You learn how to take everything you can from the learning opportunities and pivot from those and really learn and move forward and just keep pushing forward, which is really awesome.
And something else that you added too was that, like, you used the word failure, which I really liked, because a lot of people don't want to use that word. They think it's a bad word or a scary word. But we all fail, whether we want to believe it or not. We just use a different word. So how did you continue even to like want to move forward? Because it's really hard for people to do it once, and then it's really hard for people to do it twice. So like, what the momentum, like, how has your mindset changed even from each single one? Because with each one you grow, but like, what made it work?
So I will always look at those 2 townhome projects as like my greatest teachers, probably. It is on a professional level, certainly, and even on a personal and spiritual and everything else level. Like, they were they were such heavy adversity, and we were really for the better part of a year and a half sitting in a position where we knew that we were in a very, very bad position financially and
Wow, a
that we were
year?
going to lose money.
Oh,
But
goodness.
we still had another year plus of the project to go,
Mhm.
and we had to work our tails off just to get it done. And we could have given up. We could have declared bankruptcy. There were those sorts of options, but at the end of the day, we just finished the projects and sold them and took our lumps and moved on. And so a couple of things. When you are in that dark of a place and you're looking at like multiple six-figure losses and it's not, first of all, it's obviously it's not fun. And it requires, I think it requires a choice. If you're a conscious human being, it requires a choice as to how you're going to respond. So a lot of people will just be reactive and let something like that take them down and let the stories that they're telling themselves about it defeat them, right?
Mhm.
For me, I really latched on to a lot of things, but Hal Elrod in his book, The Miracle Morning and The Miracle Equation in particular, his other book, were huge for me. The Miracle Equation in particular is so powerful in that it's all about unwavering faith plus extraordinary effort equals miracles. And when I started thinking about that and thinking about the situation we were in, it was like, okay, I have a choice here as to my story about what's going on here and how it's going to turn out in the end. And I'm going to choose to be faithful that somehow things are going to work out, even though I don't know how, or I can't see how exactly they're going to work out at this point. I'm going to choose to be faithful that they are, because in general, in my life, that's how things have gone. And so I chose that and woke up every day knowing that I was taken care of and knowing that if we did the best work we could do, that things would work out. And sure enough, in the meantime, the next deal that we did, which is our 20 unit, that's going to basically cancel out all of our losses from those townhomes, came as a result of showing those townhomes to a seller, and the agent that was walking the seller through, or the buyer through rather, was a potential buyer, had an apartment complex that he personally was selling, a 20 unit here in Utah. Long story short, we bought that last August and have put about $900,000 into renovating 20 units. So
Well,
we really did it up.
Yeah.
And we here again doubled rents in Utah. Like, you can do that these days if you do the right kind of finishes and whatnot.
mhm.
And we're going to be listing that project here in the next couple months and selling it. And like I said, that's going to basically negate our losses and a little bit more. And it's done a lot of other really great things for us in the meantime. So um, it is amazing what happens if you keep going. And if you see things as a long game, and I love Gary Vaynerchuk. He talks about patience a lot. I think patience is a really wonderful um, attribute in general. And I think that it's necessary in this business. Um, it's a long game. It's a relationships game, and it's a people business, and good things happen over longer periods of time in this business. And I mean, good things can happen very quickly in this business too, but I've found that the best things happen over a little longer time frame than um, maybe what you're used to in other, like single family, for instance.
Yeah.
So yeah.
Yeah, I was gonna say, like, I hope this is an inspiration to a lot of our listeners out there right now, like who might be going through a really tough time. Like, what Tate's saying right now, with the miracle equation and that, like, I hope you just rewind, a couple minutes, listen to that again, what he had to say about that, because it's just really powerful stuff and it can really change lives. So thank you so much for sharing that, Tate. What I really do want to point out as well is, like, what's amazing is, and this is one of the reasons why we chose to partner with you and your group, Tate, just because of stories like that, right? Because you, you could have during that whole situation, like just filed bankruptcy, walked away from the project, and then just, cut your losses and just gave up, right? But that's not you, Tate. And that's why we chose you as one of our partners. It's like, we wanted to partner with you. Is like, because you aren't that person. You're not that person who just like gives up and walks away from something like that. You're gonna stick through it. You're gonna figure out a situation. You're gonna put in your hard work, your effort, and it's really cool. So if you're not connected with Tate, listeners out there, please go ahead and connect with GreenLight, because they're just in a great company. So
Yeah, and I have like three things, and I've been saying them over and over in my head, so I have to say them so I remember them. So one, if you're active or a passive investor, like these kind of questions are really great questions to ask to learn about a syndicator, right? Like you want to know the hard things that they've gone through. And although they are more difficult to ask, like that's when you really find out like if you want to work with someone or not. Second thing is when you said patience is something you should practice. What I've found out is like being patient is actually just being present. Like when you reflect in the moment, why am I feeling this way? It's probably it's a feeling that I put on myself because of something I've already done. If I can't change what I've already done, why am I in it? So I have found myself asking, like, why do I feel the way I do right now when I don't have patience? Because often Michael and I will say, like, oh, we're practicing patience, but are we for not reflecting? So that was the second thing. And then the third one, and then you can go, Tate. But the third one is there's this book. It's called The Hard Thing About Hard Things by Ben H. I don't know how to say his last name off the top of my head, but he talks about, or how I interpreted it, right, was moments like what you just described, Tate. Those are the hard things, knowing that you see a loss and you have to continue to move forward. A lot of times we see hard things, and I'm just talking about like an average day where we have to call a vendor. That might seem really hard to people, or writing a blog post or creating content. That might seem really hard to people. Like in retrospect, if that is your hardest thing, like you are in a really good position. And I think that's something to think about because I think that'll help us all moving forward and even practicing patience, all the things above, because the really hard things to me and as a business owner would be like hiring people or telling people that there's going to be a huge loss because the conversations are not firing. I don't remember what I said, but firing people. If I did say that, sorry. And then just like telling people if there's, yeah, yeah, that's true. But like having a huge loss, like that's really hard because you don't just like break your own heart, you break other people's as well. And so there's just a lot that goes into what you said. And it's very, very meaningful and very, very powerful.
Thank you. Yeah, like you said, hard lessons, and it's what makes you who you are, right? Like at the end of the day, and how you choose to step up in situations like that defines you. I really feel like that's the case, and I'm with you. I'm all about presence. I think embracing each moment in its essence and in its uniqueness is a magical thing in general. And I think in business and entrepreneurship, especially these days, there's so many good people doing good things in all industries. And you got to be a good person doing good things just to stay in the game. Right. And you guys are the same as me. I know I just adore what we do. I love this space. I love this opportunity and the business model that we all kind of loosely share, at least the goals that we're going after and the things we're trying to do, these projects. And to me, it's I've said this before, it's kind of in my 30 years or so, whatever, of being a professional, it's the space that I found that really pulls forth or kind of calls forth a sense of personal development and a sense of it makes me want to be the best version of myself. Sometimes you hear people say that about their spouse or their partner, like he makes me the best version of myself.
No, you do. You do that a lot.
But I feel like I'm a single guy right now, and who knows if that'll always be that way. But right now, this business and our business is very much, my companion in life, and it's what I'm most intimately connected to. So it really does truly call forth like the best in me, and that's exciting.
No, I like that a lot, actually. And I think that might be the answer to the question I'm going to ask, but I still want to ask it. With a loss like that and then going to a next deal, you see this happen to a lot of people, right? Like they have a loss and then they go into another deal quickly because they want to make up for the loss, or they'll do something, I don't want to say like short in their next deal because they still want to make up for the loss. The thought of the loss is always there. What do you consciously do to make sure that you aren't going into like bad deals again just to hope that they work? Or like, how do you stay resident focused? Because there are so many ways, right, that we could be like, okay, well, we're not going to actually add that because we don't have to. And like the numbers will still be high. How do you get past that? Because you see a lot of people who just like slap some lipstick on a pig and they call it good because they want the profit. And in this case, when you are very resident focused, like you can't just do that. You really, really, really
Right.
have to think about the people.
Right. Absolutely. Well, let me make sure I understand your question. So what do you do to make sure that you're not doing another bad deal? Like that's obviously, that's like the biggest and most important question I think I heard there.
Yeah.
So what, for us, those deals what we were doing was we were buying vacant lots in downtown Salt Lake City and then building 3,000 square foot $1 million condos on them, townhomes on them, and a total of 6 townhomes between 2 different lots. And it was massively speculative in so many different ways. And we had no business doing a deal like that. And at the time we were buying the deal from a developer, both deals for the same guy, a developer that put them together, and felt like we were being very well advised and well guided in the process and trusted him quite a bit. And whether or not that was as smart is kind of a different conversation, but what wasn't smart was us trusting anybody the way that we trusted him, and in the sense that we didn't know what we didn't know, right? Like, so there's this whole aspect of due diligence on construction projects that you do, and had we done it properly, it would have saved us, and we didn't. So all that said, right, that is to me the definition of a very speculative project. The opposite of that kind of deal is, say, a multifamily deal where you've got rents that are covering debt service, covering expenses, and covering your cost of capital and still cash flowing. And you've got historicals, you've got an existing rent roll, you've got an existing tenant base, you've got management in place, or you can get good management in place. That to me they're 2 very, very different animals in the sense of speculation, right? Like you're just not looking at the speculative aspect you're buying a business in a box, essentially a business on a piece of land that has, like I say, historical financials and fills a universal need. So we feel like the short answer to your question, to summarize, is by virtue of the asset class that we're currently in, kind of class C plus, B minus to B multifamily assets, that we've mitigated an awful lot of risk because they're, by so many different ways of looking at it, non-speculative type propositions, if you will.
Yeah, absolutely.
Yeah, no, that makes sense. So thank you for that. Because I want people to think about how they can avoid something like that as well. I mean, everybody has their own learning lessons, but it's just something to think about.
It's all about risk mitigation, understanding the risk, and then mitigating those. Yeah. So which again, just did a very good job. Yeah.
Yeah. And if you're modeling any kind, whether it's a single family or a 250 unit, if you're modeling a buy and hold structure, you're generally taking quite a bit of risk out of the prospect. And if you're looking at it as a long-term or even a short to mid to long-term hold and you're going to cash flow it, right there, you've taken quite a bit of risk out of the proposition. But in general, the bigger the asset you have, the more income you have, the more units you have, the less risky it is, because if you own a 4 unit and 2 of the tenants move out, you're 50% vacant. Yeah. If you own a 50 unit and 2 of the tenants move out, you're 95% or 95% occupied. So, or 94%, I think, or something like that. So we really like larger scale assets and the larger unit count assets. And that's really what we're targeting right now for lots of reasons, but risk mitigation is definitely one of them.
Yeah, absolutely. Love to chat with you all night about this, Tate. Unfortunately, we're coming to the end of the show, which brings us to the 4 exploratory questions we ask all of our guests. So the first question we have for you, Tate, is where is one place you wish to travel to and why?
Yeah, there's actually a lot of them right now on my list. I'll say I'm going to go with, oh man, it's right there between England for like Premier League soccer games and New Zealand for like national park, checking out glaciers and stuff like that in New Zealand. So I'm gonna throw 2 in there.
No, I like it. Thanks.
Love
So the second question is, what is the number one thing on your bucket list and how are you leveraging real estate investing to achieve it?
We have family property on Lake Michigan up in northern Michigan, and it's kind of just paradise on earth. And it's the place that my mom lives in the summers now for about 6 months a year. And it would really serve our family well for us to actually have a second place in that vicinity. And so my first big purchase as a non-cash flowing rental investor will be in the northern Michigan area. And that's really about family, about making sure mom's taken care of. And, you know, right now and in my life, if I get to the end of my life and I can say, you know what, the end of mom's life was wonderful and I was a part of that, then I'll
Aw,
feel really good about things. So
I like that a lot.
That's cool. So the third question we have for you, Tate, is what is one piece of advice for someone who wants to start passively investing in real estate?
yeah, well, Susie, you had some good advice earlier about questions to ask syndicators. And I would say, you know, date and don't marry, you know, like don't be shy about doing a minimum type investment on a deal just to get your feet wet with the syndicator, and maybe try working with a few different syndicators to see what the experience is like. By all means, my biggest message would be do it and enjoy the ride, because, you know, as long as you're picking a good solid syndicator and a good solid deal, things are likely to go very, very well.
I like that. Enjoy the ride. That was a good one.
Yeah.
So the fourth and final question is, if you had unlimited resources available to you, how would you leave an impact?
You know, I think I would, this is going to be on quite a different vein than anything we've talked about, but I think I would like really work at figuring out how human beings can live sustainably on this planet.
I
in a
like
good
it.
way. Yeah, I think we've got problems that are maybe even a little bigger than we realize, and they need to be addressed. And so to me, we got to start, like anything, it starts with the physical. I think the human quality and human well-being starts with being physically healthy and physically in good shape. And a lot of other things fall into place when that's the case. And I think that'd be the case if we were living on this planet in a way that would last longer than another 50 years or
I
whatever.
like
So,
that.
and I'm an optimist. I really am. I think we can do it.
I do too.
Super
Thank
cool.
you.
Yeah, awesome. Well, thanks so much, Tate. I appreciate it. Before we close out, would you mind sharing with our adventurous family how they can learn more about you and connect with you?
Absolutely. Yeah. So thanks again, guys, so much. This has been great. You can connect with me on our website, our landing page. It's just glequitygroup.com. Another way of getting there that's easier is investwithgreenlight.com. That gets you to our investor page where you can sign up to be on our investor list. You can make an appointment with me if you'd like. I really love when listeners reach out to me for no other reason than to say, hey, would you spend 10, 15 minutes on the phone with me talking about my business? I love those calls. So I've been doing a fair amount of that recently. So my Calendly link is on our landing page as well. Feel free to reach out to me anytime, anybody.
Yeah. And when you do reach out and connect with Tate, tell him that you heard him and us on the Adventures of Real Estate Investor podcast, and he'll be sure to make sure to connect with you.
Absolutely.
Yeah, well, Tate, thank you so much for joining us today. It is always a pleasure, and I cannot wait till we chat again.
Yeah, loved it, guys. Thank you so much.
Awesome. Thanks. So until next time, explore more, adventure awaits.
Whoa!